Hello, this is Steve Sessions, CEO of the Sessions Group. What a thrill today to have Mike Clayton, who is an expert in real estate property taxes. He's been in the industry for 26 years. He's had his own firm for the last 13 years, and prior to that he was with Deloitte. So Mike, it's just a great pleasure to have you here. Mike also comes in when I teach at the University of Denver at the Burns School, and he teaches graduate students all about real estate property taxes, and they find his insights invaluable. So Mike, again, we're going to be talking to owners today as to what they should be aware of, because this is a big issue. Property taxes are a big number for in the real estate expenses for a property. So why don't you go through and kind of go through the process a little bit, what owners need to be aware of here, and let's just go through it. This will be great.
You bet. Steve, thanks for having me, and I couldn't agree with you more with respect to owners and specifically the times, because it's just so competitive today with leasing and trying to get an edge on other properties. And because the times are so difficult, the economic times, and with the decline in values, what we're seeing is that property owners are looking for any way that they can to better their bottom line, to lower expenses, and clearly property tax, it becomes part of the equation. And so often...
It's a big part of the operating expenses.
No doubt about it.
It's big time.
No doubt about it. And the question is, well, are property taxes controllable? And the answer is, sometimes they absolutely can be. And when you ask about the process here in Colorado, it's a little bit different than what you may see in surrounding states. And that is that Colorado assessors, by law, are required to reappraise all property in their counties every 2 years. So 2011 was a reappraisal year statewide in Colorado, and assessors were required to use a base period concept in order to determine fair market value.
Now I know that most owners do not understand this base year, so let's go through this a little bit, because I know this is confusing to a lot of owners, because they're saying, hey, what's going on here? And we're not looking at the same time period.
You're exactly right. I may get a phone call where a property owner will pick up the phone and say, hey Mike, I need your help. I just lost a major tenant last month, and with the loss of that revenue, my property's not worth as much as as what the assessor is saying. Help. And we kind of have to walk through certain steps in order to determine whether they may have a case for a lowered value. And that is, with the 2011 reappraisal, Steve, the assessors are required to use a time period that starts January 1 of 2009 and runs through June the 30th of 2010.
Whoa.
So
that's history. That's old.
Exactly. And so you need to look at how the property was performing during that 18-month period. And if you had a major tenant move out the end of 2010 or during 2011, and you introduce that as evidence during a hearing, they're going to say, wait a second, we need to strike that from the record because it's after the valuation date of June the 30th, 2010.
So even if the owner is pleading with the assessor saying, please help us, they're saying, no, we'll wait till 2013 and then we'll address it at that time.
You're exactly right, because 2013 is the next scheduled reappraisal, and when they do that reappraisal in 2013, they'll use a base period that runs from January 1, 2011 through June the 30th, 2012. So they'll come back and say, okay, we feel your pain, however, we can't use that data. We will use it for the next scheduled reappraisal for 2013, which are the taxes that you pay in 2014. So again, you're right, it can be a confusing concept, but again, for 2011, that reappraisal, they were using data from 2009 through June the 30th of 2010.
So they'll say, we feel your pain, but show us the money, right? Show us the money, okay?
There you go.
So what is the process here? What are the key dates that an owner needs to be aware of as we go through this?
Yeah, right now, January 2012, a key date is clearly property owners are receiving their tax bills right now. The mill levy was set in December. Tax bills were issued in January. Property owners have the option of paying their property taxes in 2 installments, the first being February 28th, The second being June the 15th, or they can pay it in all in one installment, which would be April the 30th. So those are dates from the tax side dealing with the treasurer. From the assessor side, the key date would be May the 1st. May the 1st is when the notices of value are issued, and taxpayers have until June the 1st in order to file an appeal if they feel that their value is excessive.
So if they want to file appeal, that's where they need to visit with you and say, Mike, we need to do something here.
Yeah, and what I would say to you, Steve, is just filing an appeal may or may not be appropriate. And in Colorado, we've had this discussion before, property owners need to be careful, because just as the county has the right to lower a value upon appeal, the county also has the right to increase values upon appeal. It doesn't happen very often, but the point is, if an appeal is frivolous and it is not warranted, and a property owner is just saying, hey, you know what, I want to get my property taxes down, I think they're too high, but really hasn't done his homework to determine how that value really stands based on an income approach to value and other parameters, the assessor could come back and say, hey, you know what, thanks for bringing this to our attention, we need to make an adjustment, but unfortunately for you, it's in a different direction.
Wow.
So again, what we say to property owners is just make sure when you look at that notice of value, make sure that you've got the information from the base period with respect to your income and expense, with respect to your rent roll and vacancy issues, and then put it together with an income approach to value. Take a look at the assessor's physical characteristics of the property. You'd be surprised sometimes when you go in and you look at what they have in the assessor records, sometimes there can be mistakes. The assessors, do a good job, they're trying to get the numbers right, but so often they're understaffed, they're overworked, they're trying to get the values out as good as they can, but there's a lot of room for error, and that's where, yes, a property owner wants to take advantage of that June 1 appeal deadline if the value appears excessive.
Wow. Well, this is great, Mike. Thank you so much for sharing this with us. Again, this is going to be the first of several video series on real estate property taxes. We're also going to get into multifamily, because what you really focus on is commercial. So I think there's some differences there that owners will want to be aware of. And so, Mike, thank you so much for taking the time here. And so if you have any questions that you'd like to address to Mike, go ahead and just shoot us an email or give us a call, and we'll be happy to address that. So, Mike, again, thanks so much, and we'll talk to everybody soon.